Hey guys, it's Mari here. Sorry for being a bit late on my recap. I was traveling for a little bit in August, so I was a little busy when I came back. Also, I wanted to talk about this month. It is a very big difference between any other of the months that I have talked about because it is actually red. It's really, really crazy for me. And it's also pretty difficult. I tend to be consistent, as much as I can. I try my hardest, but not every month can be sunshine and rainbows, and that is trading. Sometimes you mess up, sometimes it's not easy, sometimes it's low, and sometimes you're also in the most beautiful place in the world where trading big size shouldn't even be an issue, but it was. So I'll talk a little bit about what happened. I lost about 20K in August, but let's talk a little bit also about having the right perspective. So after August, I was feeling very bummed, and I have talked to a few traders that have been feeling the same way. By far, it's by what I've noticed from other traders, it's also been one of the hardest months for me, but also one of the hardest months for them, since we came from the February, January, March months. We were very spoiled, and now it's harder times. So it wasn't very hard because of the fact that I am red, but because of what led for me to be red, and also the decisions that I made were very poor. So it's also just kind of thinking about the environment. Am I good while traveling and trading, or is that kind of my personality, or do I really need to? Because if I can be consistent and I don't have to trade as much while I'm traveling, then that is very good. Because if I am green on the month, then that kind of just mentally gives me that relaxing mindset that I need for me to really enjoy vacation, because it was very beautiful places, beautiful people, best company in the world, best food, best views, best everything. So trading bad also leads to just being irritated and just kind of just having a more difficult time than you actually should, which is not what should happen. But I'll talk a little bit about these trades and what happened. If you see in my calendar, I started the month off, the first 3 days were okay for almost 31,000. And then Thursday came, which was negative 32,000, and the 11th for negative 41,000. They are, it is pretty much my biggest setback since I have started trading, because it's almost 70 grand in 2 weeks. That's pretty crazy to me. I still finished the first week green, but that is because I did take some good trades, but also it could have been a lot better if I would have handled it a lot more calmly. And then on the 11th, it was just very unfortunate decision on my part, because I was already traveling, I was already in Italy, and I used big size on panic. They were both panic dip buys. And as I've mentioned in previous recaps, panic dip buys have not been working very well in the past few months. And everything is a lot choppier, everything is a lot more liquid, and these are actually two NASDAQ dip buys, which you rarely will see me buying NASDAQ in the first place. So what I have noticed is my NASDAQ long is just not a very good strategy for me, and obviously sizing up is definitely not the best idea for myself. And that is just because I do prefer OTCs. OTCs are a lot cleaner, except it is very harder to fill at the right spot instead of NASDAQs. But also, NASDAQs can be a lot more volatile and a lot more liquid. So, yes, you can fill right away. You can also fill all the shares that you want at whatever price, but it also has 50 cents to $1 pullbacks. And almost 2 seconds and you were suddenly emotional holding something that you don't want to hold, and then you keep revenge trading it. So it all becomes a snowball effect, and that is just because it is they're very quick. So sometimes their reaction time needs to be quicker, or else you will be stuck in a position that you don't want to be stuck in. So that is pretty much what happened to me in both of the trades. I will explain, and I'll also share one of the rules that I've made for myself from now on. And yeah, let's get started. So first off, I would like to talk about Hood, which is my first big gain and big loss on the 4th and the 5th. So as you can already see, beautiful extension, which we have talked about before. We're looking for that first red day, for that first pullback, for the first time that it actually comes back to reality, because it is up from 30 to 85, which is very crazy. So at first, on like the first few days, a few people were trading it, but I wasn't very interested since this is a new IPO. So it had no previous levels, and I also did not have previous history with the ticker, so I've never traded it before, and it's also a NASDAQ, so it's already not in my A+ list. And I would rather wait a bit. I'd rather wait to once it gets extended. That's when I'm the most interested, because the volatility is there, the liquidity, and also the perfect first red day framework is there, and that is when my strategies kind of like work the best, because it would be panic dip buys, and that would come like on the first red day. So meme stocks also, this is Robinhood, so as we've already seen before, AMC, GME, they can be very powerful, and the moves are also very clean. So I was looking for that short trade when I came into the day. But here's the thing about these shorts, they can be very dangerous. Like if you're in too quick, then it is not good, because for the first like 1.5 years of my trading journey, I didn't even have a shorting brokerage, because that is the main thing that is said to beginner traders. It is very easy to get into an ugly position. So Tim Sykes doesn't even short, because the market is just so good for going long that you don't really want to waste your time, because almost everything went up. Almost everything goes up, and it can just get very ugly. So I didn't even have it. The intensity of the moves and also the reaction time has to be a little bit more experienced. So I did get a shorting brokerage like a little bit ago, so now I can take these trades. And coming into the day, I will go into the 4th and the 5th of Hood. So here is the 4th. So coming into the day, like it was already gapping up to 50. So it went from 30 to 50. And I knew that all eyes would be on it, and I wanted mine to be on it too, even like if I never traded it before. This kind of is the ticker that I want to keep my eyes on, because has the volume, has the chart, has a price action, has the liquidity, and it is the stock of the day. So I want to have it up. Even if I'm not going to trade it, I still know that there could be an opportunity, because that is what traders wait for. They wait for these giant opportunities that don't come very often. AMC, GME, Hood, they don't come very often. So these are the ones that traders most wait for. Even if you don't trade it, you still want to watch it, because it builds the history in your experience. So I knew that I most likely would not want to go long, because it's already extended enough. So that wasn't really like the ideal scenario that I was looking for. And I was thinking that if it presented like buying pressure in the morning, I wanted to acknowledge that like these stocks that have proved to be huge winners can be the ones that go up hundreds of percent more. Like, you can't underestimate the run that they'll go in, because there's a lot of shorts also in this in these, and there's a lot of buying pressure. So I am waiting for the best trade, and that would be on the speed up, ideally hoping for a gap down cover, and that's what happened. So first, I kind of was just like avoiding most of it and started to take some into when it gapped up on this third gap up or so. I started to get interested and I took some short. Obviously, I didn't have full size. Like, it wasn't really like I had a lot short, because it could also go to 100 or something crazy. But I then waited for the confirmation, and I tried to add as much as I could on this red candle, but I didn't really get it fill. So then I waited for this kind of bounce to 76. I took more short at 75. I was risking 80, high 70s, or if it started to hold up and perk, then I would most likely take my loss. But once it started to prove itself, I waited for this bounce to top out, and this became my risk now, because over that bounce, I don't really see that it's staying heavy, and I was looking for a dip to VWAP or something like that, because it went from 50 to 85 in like 15 minutes. So then once it stayed heavy, if I exited at around 74, I would have still taken a gain, and I could always re-enter at 80. I could always re-enter at 77. So I just want to make sure that I take my gain, and if I'm right, then I can cover lower, or if I'm wrong, then I can just take a little bit of the gain and re-enter higher. And that's what I did. So I covered, and then I dip bought some. I sold some, dip bought again, sold, and so on. Then after a few of these very giant candles, and I just kind of like stopped getting interested and move on for that day. That was the 4th for 31,000. Now we can get into the next day, which is where I made my mistake. It was on this day, on the 5th. It was the day right after it. So one good day, and now I talk about one bad day. As I said before, you can underestimate the run also, but you can also underestimate the unwind, which is what I did wrong. I underestimated what could happen, and this is what happened. So I had this on watch for a short the next day, which I was able to short. Coming into the day, I had some short pre-market. Again, it was very little size. I just kind of wanted to get some short and kind of like see what would happen. It wasn't gapping down too much, so I thought I would cover if it was weak in the morning, and then I would look to short again at near high of day, or when the bounce looked to top out, because I was looking for that first red day opportunity coming into that day. And I shorted some, and then I covered, and I was just kind of trading the morning action. I remember that I finished the day up about 15,000, so I was very happy, because the day prior I was up 30,000, the next day I was up 15, so 45 grand in 2 days is very good. But here's where like the greed comes into action, that one last single to end the day right. Do you ever feel like I just want to take one more trade to kind of finish it off? And that's what I did. I got back at the screens at around 2:30, and I started buying at 58, and then I cut. Then I kept buying at like 57 or 56, and suddenly I'm just like in the back of my mind, I'm like, I just want to make this back in one trade. So I'm down 2 grand, and I'm trying to make 2 grand the next trade. Now I'm down four. Now the next trade, I'm trying to make four. Then I'm down four others, so now I'm down eight. And then I'm down 16. And now I'm just trying to like make back 16 in one trade because the reversal is going to be huge. Well, that's not exactly what happened. And instead, I just kept buying more shares and I kept cutting lower. And I was just hoping for that one reversal candle that would just give me a $3 relief, like a 30-cent relief. But instead, it just kept dipping, and that is what I did wrong. I came in at around 2:30, and that already kind of like pushes it into the power hour kind of time. So that is the thing with late day panics. And late day panics, they don't have enough time to bounce, and that is the difference between morning panics, midday panics, and late day panics. Late day panics, they don't have enough time to reverse. So morning panic, yeah, if it panicked to 50 in like the first few hours of the day, it could grind up $2 a share. But instead, it was just a gradual downtrend into the close. So what are the odds that it's going to bounce up to back to 62? Well, they're not very good in my favor because it's already proving to be an effective first red day, and that is not where I want to be. So that is where I lost 32,000. So now I'm pretty much back break even, and that stinks. Now, moving on to my second mistake, it was mRNA, and I'm not going to get too into it. Let's look at the daily chart. It was on the 11th, and again, it was the same mistake. So I started buying early, and it was a NASDAQ panic dip buy. So I was too early, and I got stuck. I just kind of like kept thinking, if this kind of has one reversal candle and then it starts to hold and it perks up, then it's going to get me back break even. So at first I'm thinking, okay, I just want 1,000, I just want 2,000. But then you're like, I really just want break even, or I just want to get out and minimize my loss. So it all starts to become emotional, and the last thing you do is like to take a big loss. So you're just hoping for that break even trade. And if it doesn't happen, then you already know that you're going to be taking a big loss. So instead, cutting right away is definitely the best thing that I could have done. If it wasn't working in my favor, I can just cut right away and just re-enter lower, or just don't re-enter at all, because it is the first red day. Well, the second red day, but this showed that it was a meaningful second red day because it already went up so much. It went to 500. So the check back to reality had to be 2 red days in a row that were meaningful, and panic dip buying really was not even worth it. And just thinking like the bounce has to come, like it doesn't have to at all. So that created one of my first rules that I have and will religiously follow. I don't like typically create rules, as like I am flexible with the strategies that I take, because like none are the same. But I have noticed that first red day, second red day panics on Nasdaqs just don't do it for me. And the unwind is always larger than what I thought it would be. So I won't be dip buying Nasdaqs. Instead, I'm just going to be waiting for that first green day. And goals for next month is not take a big loss. I'm about like $5,000 away for making all of my losses back. my 70 grand back. So slowly building myself up and like being ready for hotter months. Like there will be hotter months. It happens, but learning from them is important. And $20,000 a month, negative $20,000 a month is does not define me as a trader. I'm getting experience, and immaturity doesn't last forever. There are always the times where we make mistakes. I am not perfect. You're not perfect. Nobody's perfect. And sometimes we have to live with these losses, but the way that we get back from them is very important, and not swinging for the fences for the next 3 months and trying to make it all back, but instead taking it one trade at a time, learning from them, and having more experience for hotter months, and also not having a huge downtrend in your daily chart, but instead, if you have the big losses, then you still don't want to keep going on that down grind. No, because consolidation and slow periods happen to everyone. So for those that had problems in August, for me, I had problems in August. It does not define you, but instead it gives you experience. And the more trades and the more losses, the more gains, that will just only build you into a better trader. So I will tell you guys about my September in a few. Thank you guys.